Welcome to Invest's Impact Spotlight. Today we're featuring Sofia Yague from Next Legal, and she is going to teach us a little bit about public benefit corporations, the legal structure, its purpose, and an exciting recent deal that she did in the space focused on a company in LATAM that is employing this structure. But before we dive into all that, thank you, Sofia, for coming. And please tell us a little bit about yourself so our audience knows about your vast experience in the space.
Thank you. Thank you very much. My name is Sofia Yague. I'm a partner at Next Legal, which is a boutique law firm based in Miami. I've focused my practice on venture capital for many years now. I advise startups, angel investors, venture capital funds, mainly from Spain, Latin America, and Miami, on many different type of deals, but primarily on corporate structurings, financing rounds, of course, and selling the company in the case of an exit. And yeah, as you said, like it's becoming more frequent to see this structure that we're going to discuss today. So I'm very happy to tell you more about it.
Thank you. And for those who are tuning in who don't know me, I'm the CEO and founder of Invest, and we capacity build financial intermediaries, entrepreneurs, and funds on how to impact invest. So the reason we're featuring Sofia today is to teach the fund managers out there that are moving into the space or people looking into impact at a potential alternative legal structure to the ones you've been currently using traditionally when forming a company. So because we're focused on impact, I always ask my guests and my attendees, what does the word impact mean to you?
Well, obviously, like impact means to have an effect or an influence, right, in some field. And in my particular case, like I've been trying to make an impact on venture capital, and particularly on venture capital for Spain or for Latin America, and connecting startups from those jurisdictions with venture capital funds in the US, facilitating communications between them, and in general making sure that the way that VC funds in the US look at these companies becomes better and better. And so that's I think how I've been trying to contribute to the ecosystem. And of course, in the case of startups that are looking to have an impact, I think and particularly in the area of this conversation, it would be, for startups, it's always about disruption, right? So in this case, it would be, I think, disruption combined with being socially conscious. So not only making or starting a company that can be very profitable, but can also make a difference or improve the lives of people. So.
Wonderful. Thank you so much for that and for your contribution as well. So to teach our excited audience a little bit about these structures, can you tell us what is a public benefit corporation and why do you think it matters?
Sure. Just to maybe begin with most people know about LLCs or C corporations. Actually, in the US, C corporations tend to be the most used vehicle to receive venture capital investments. So the PVC, which is how we commonly call it, it's also a type of legal entity, just like the LLC or the C corporation, but it has certain particularities that we will discuss in more detail. But obviously, the main factor to consider is that this is a type of legal structure that has to be used only by companies that have a very that have a social purpose, that have a specific purpose that they want to include in their own organizational documents, and that's why, for example, if you don't have a very clearly defined social benefit, then it may not be the right structure for you. But for those companies that want to combine those two things, like the social aspect and the profitability, it's a very good structure to look into.
Great, yeah, and I think if I recall correctly, some of the founders or the originators of this were particularly excited to be able to integrate a way to express a mission as well as still imply a profit maximizing condition, which historically at some, if I'm correct, at some points had been a challenge for some companies, right? Like they felt pressure from shareholders to put profit maximization ahead of their mission, and this kind of protects them from difficult points in the growth of the company and having to make decisions that are always aligned with the mission. Is that correct?
That's correct, and there's also a lot of misconceptions I feel around public benefit corporations. There's also a lot of confusion with some people don't know the difference between the public benefit corporation and certified B corporations, which is completely different. And actually, I think many people believe that public benefit corporations are not for profit. And that is not the case. And because obviously if that was the case, it wouldn't be very attractive for venture capital investors, but it is. It's a for-profit type of corporation. It's been approved or adopted in most states in the US, including Delaware, which is the state, as you know, where most public companies are incorporated and also where most startups are incorporated. So actually the laws governing and surrounding Delaware public benefit corporations are very similar to those of the traditional C Corp corporation, so they are pretty investor friendly, and that's why it's a very interesting structure for even for startups trying to raise money.
Awesome. And tell us, I mean, you mentioned, and so did I, that there is a mission sort of statement that the investor and the entrepreneur are bound to. But what other features make it different, or what other things should investors consider when they're looking at companies of this kind?
Mm-hmm. There's I would say like 3 key things to know about this type of structure. One, as you just said, is yes, you have to have a well-defined social purpose, and that purpose has to go in the charter of the company, the certificate of incorporation, or the articles, depending on the state. And obviously, it has to be specific enough, like and describe with particularity what is that social purpose, which can be in many different fields, like education or health or environmental, artistic, right? But also it has to be broad enough so that to allow the company to grow and expand its business. So that's number 1. Number 2, and I would say this is probably the most important thing especially for managers to remember, is that the members of the board of directors of a public benefit corporation have to balance 2 different things, right? Like as in any other like traditional C corporation, they of course have to look after their shareholders and try to maximize shareholder value. But at the same time, they also have to always consider the effects that their decisions, the impact that their decisions could have on the people, the communities, like the interest of those related to the company's purpose. And they really have to do it. Like they really have to, the way they have to make those decisions has to consider these 2 things. And sometimes, obviously, these 2 things could be in conflict with one another. So that's that's where it can become a bit tricky, and they have to be careful. And that's why it's very important to have like very good corporate records and explain, as opposed to, you know, in a traditional C corporation where maybe you can be a bit more generic when you explain why a decision is good or bad for the company. In this case, it's good to, there has to be a little bit more of like substance on how the decision was made by the board of directors. So that's very important. And actually the shareholders of the company could even initiate an action against the company, against the directors, if these two things are not properly balanced. So that's kind of the key thing to consider. And then finally, the other thing you, like everybody needs to understand is that transparency is also very important in public benefit corporations. So there's also a reporting requirement, an obligation, and the company has to report on a, you know, like constant basis, depending on the, for each company it could be different, but there are minimum reporting requirements, and there has to be a report that telling the shareholders of the company how the company has been trying to, you know, like accomplish its mission, to pursue the social purpose that that the company has. So those are kind of the key things to remember and to consider.
Fantastic. Those are very helpful. And yeah, we've seen, I believe there are some examples in the past of companies that have had that sort of struggle when they're trying to grow, of balancing shareholder demands, of course, with the impact. However, what's exciting, at least from my side of the table, is seeing more and more data pointing to companies, whether or not they're PVCs or just integrating impact, still outperforming their peers in the long run. So while these things may seem like short-term value issues, more and more it seems the more you're integrating the impact anyway, the better you will return in the long run. So that's sort of an exciting trend that is perhaps giving more validation and making people feel more comfortable with this model than when it first came out.
Right.
So tell us, I know that you just had a recent exciting experience structuring a deal of this kind, which is sort of a pioneer for the market it occurred in. So I'd love to hear more about that and any details you'd like to share.
Yeah, I mean, we're very excited because we very recently, we just closed a Series A financing round for a Chilean startup called Burn to Give. I mean, I'm not know for sure if they are the first one, but I'm tempted to say they're probably the first startup from Latin America using PVC for this kind of round. So yeah, I mean, they are definitely, I think, opening the door to more examples in the future. I mean, it was really the founder and CEO who, from the beginning, insisted that he wanted to investigate more about this structure, and I was like, of course, yeah, why not? I mean, it's true that it doesn't come up all the time, but I mean, if you understand the company's business, I mean, it's clear that they have this social purpose. What they do, just so you know, like it's super interesting. I think they're geniuses. They are so Burn to Give means like. It refers to burning, like exercising, burning calories. It's a B2B platform. And so they are partnering with companies, and they are offering this app, this platform to employees. And the more these employees use the platform and change their habits, and as they have a more healthy lifestyle, by, for example, exercising, they get benefits such as like better terms in their life insurance policies. And also they can contribute to different causes, like for example, like feeding underprivileged families and things like that. So it's really incredible.
That's really great, amazing. And that isn't, and they are domiciled in Chile, serving the Latin American market, correct?
They are, exactly. They are serving the Latin American market. They have their holding company in the US. That's why they could use this structure. But yeah.
So in Chile, is there a similar structure, or is it more common to see it kind of coming through the United States holding, and then investing again back into LATAM?
So all these companies, as they grow, even if they have kind of like an equivalent in the local market, as they grow, they tend to come to the U.S. in terms of where the holding company is located, because obviously they want to attract investment from also U.S. investors and maybe investors from all over the world. And as you know, like usually Delaware, it's considered like the kind of neutral and a jurisdiction that is very appropriate for this type of investments, and everybody feels comfortable with it. So that's kind of the main reason why they also come to us, to the US. Yeah.
Amazing. And so in this example, and is the mission you said had to be pretty broad. Is they maintain, how do they kind of, or if you can give us, for example, an example of a mission that is broad enough, how do they kind of position themselves to keep the mission broad enough, but yet be able to have the impact they intend to?
Yeah, I mean, obviously, I mean, yeah, it's hard to explain, because yeah, it's like it has to be broad enough, but at the same time it has to be specific. So, but I mean, as long as it generally covers the purpose and the social impact that it describes properly the type of impact that the company is trying to have in which field, and what are the main mechanics that they intend to use. I mean, that's usually enough. So yeah, I mean, and it's public, like you can see also these the mission statement of these companies. Some of them are even available online, because there's also like some well-known companies that are using these structures, such as Patagonia or Kickstarter. So there's I mean, there's all these examples are also like easy to find online. So.
Well, those are great examples, yeah. So for those of you looking for other public examples, check out Kickstarter, Patagonia, and tell us a little bit of advice to managers considering looking at an entrepreneur, or perhaps even encouraging some of their prospective entrepreneurs to use this structure on what are the benefits or considerations that they should have in mind.
So yeah, I mean, as I said, I mean, there's a few things to always keep in mind. I mean, the different factors that we described before, but I don't think those are really like hard to comply with. I mean, obviously the company has to be serious about it. You cannot be just like, okay, let's, it sounds good, let's do the public benefit corporation, because I don't know, it's gonna sound like we're super, no. Everybody obviously has to take it seriously, and has to, and as I said, particularly the members of the board of directors have to understand very well what it means. Other than that, I mean, the reporting obligations, I don't think are so so hard to comply with, but yeah, I mean, it's a matter of just you know, like working with corporate counsel to prepare those corporate resolutions, make sure that in the board meetings, you know, like the discussion and the decision making process always considers the beneficial purpose that the company is trying to obtain, and that's it. I mean, there's really not. I mean, it's not so complicated, I would say.
Amazing. And would you recommend this structure to entrepreneurs going forward that have a mission already embedded? And maybe have not heard about this model now that you have experience structuring this deal?
I think I will like more and more in the future definitely mention it to more clients or prospective clients, because as I said, I really think it's a really good structure, and if I see that they have this kind of mission or a purpose as part of their business, I will definitely mention to them. Also, it's true, I mean, the fact that most companies are still C corporations or LLCs. And most people don't know about this. Most people don't understand it. And it may be also that the founder says, okay, I'm not sure if I want to, like do something that not so many people are doing. I'm going to have to explain this to every single new investor. I'm going to have to make sure they're comfortable with it. So yeah, I mean, it probably adds a little bit of that, but I think, I mean, as you could see in this conversation, it's pretty straightforward, and I think it will definitely become like more common to use these structures.
Great. You made a great point about the B corporation versus a public benefit corporation, just for the audience to have clarity as well. As Sofia mentioned, a B corporation is a certification process, not a legal structure. So while they ask many very important questions to the applicants on their environmental, social, and governance policies, etc., the underlying entity is not legally obliged to meet their mission, which is in some ways why this is an exciting model. It becomes more than just you can't just use it as a marketing strategy or perhaps other things, because it is truly embedded in the legal structure. Feel free to jump in with any other comments on the certification, but I just wanted to clarify that as well.
Yeah, no, I think that was super useful, and that's actually the first thing that always comes up when I'm talking to clients, and they always ask about that difference. So it's great.
Yeah, so you can be a PVC and have a B certification, or just have the B certification, or just be the PVC, correct?
And it's also, and you can also start with a C corporation and then convert it into a public benefit corporation. That can also be accomplished. So
great, that's not difficult.
No.
Excellent. Wonderful. Well, this has been very informative. I really appreciate you taking the time to speak with us here today. We will definitely host more of these spotlights going forward, and hopefully even have Sofia again in the future. In the meantime, please stay tuned. We're going to be having a couple of series of educational content on impact and ESG investing in climate action coming up in the next month or two. The first will be released in September, and we will have follow-up sessions and spotlights on the subject going forward. So thank you all for joining. Sofia, thank you again.
Thank you.
And we look forward to continuing the dialogue.
Perfect. Thank you.
Thank you.
Bye.
Bye.